Retirement can be a really expensive time in your life. You may want to have money to travel, you may want to engage in some hobbies that you love, or you may want to go to some nice expensive restaurants and so forth. But you also have unexpected expenses that you have to account for as well, like higher healthcare costs, or you may have an expensive repair in your home that you have to attend to. See, just because you are retired doesn't mean that your expenses are as well. So a smart retirement income plan is vital if you want to have a stress-free retirement that you can enjoy. So we created this short educational video to be of some assistance if you're looking to retire with more income. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And our goal for making these educational videos is to make the stressful and difficult process of retirement income planning simple.
Absolutely, Andrea. And we do this by incorporating a team of experts from certified financial planners, certified financial analysts. We look at insurance advisors, estate attorneys, and other needed professionals to help our clients build a written retirement plan that's going to let them know when, where, and how to take money out of their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notifications bell to be notified when we upload new videos.
So, what is a retirement income plan? To me, Andrea, a retirement income plan is designed to help you focus on the details of your expenses after your paycheck stops. So your retirement income plan should include all of your assets to help you generate enough income that will cover all of your expenses for the rest of your life. So the difference to me of a good retirement income plan is you working for your money or your money working for you. So let's talk about how you can actually have a retirement income plan that's going to be sufficient for you. But before we get into that, there are two rules to retirement that we're going to always give you. And what are those two rules, Andrea?
Rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So when it comes to retirement income planning, there are really only two stages that you're going to really need to pay close attention to: the accumulation phase and the decumulation phase. So when it comes to the accumulation phase, basically that's just your income that you're earning while you're working, minus your living expenses, and whatever you have left over, you try to put towards saving to accumulate for the future. At the decumulation phase, which in my opinion is the most important phase of your retirement, you take those savings and then you look at plus or minus your investment gains and losses, plus any fees and taxes, and whatever is left over is your net income. This is what you can actually take home. The biggest question that most retirees have is how much will they need and for how long will they need it? And the other major question that you're going to want to ask yourself, would you prefer income to be something that you constantly manage and monitor, or something that is always more regular and predictable? That's going to be the question that you are going to have to answer when it comes to your retirement income. So when I'm helping my clients understand retirement income planning, I try to talk about the three-legged stool. It's very important. It's a very old concept, but I think it's pretty unique. But let's talk about this. The three-legged stool used to consist of your Social Security benefits, along with a pension that your company may offer, and your personal savings that you have built up as well. But as we continue to look at what's happening with the state of Social Security, the Social Security Trust Fund is expected to disappear by 2034. And at that time, Social Security will only be able to pay 79% of the benefits that they are currently paying to retirees right now. With that being said, we know that Social Security represents anywhere from 40 to even 50% of most retirees' income. As a matter of fact, over the last 19 years, Social Security has lost approximately 33% of its buying power. So that's a big problem. And we also know that 90% of Social Security recipients do not maximize their benefit. So what can we do about this? We have to continue to educate ourselves. So now that we continue to look at a pension, in 1998, 59% of Fortune 500 companies actually offered a defined benefit plan. If you look at today, 20% or even now less are still offering a pension for their employees. And with those pensions, many of them are underfunded, and they're even making cuts to those pension benefits as well. So that is not reliable. And then when we consider our personal savings for retirement just completely remains low. That is one of the main reasons why the U.S. government actually implemented what is known as the Secure Act right now. 33% of individuals age 55 and older have saved less than $25,000 for their retirement. 34% of the U.S. workforce has no savings at all. That's astonishing. So when you're taking a look at this, your pension has now been replaced also by a defined contribution plan. So basically what the 401k has done has taken the risk off of the employer and shifted it to you, the employee.
Okay, so what I've gathered so far when it comes to retirement income planning is that Social Security is unstable, number one. Number two, pensions are going away. And number three, savings are too low.
Yes, these are the three things that you need to be focused on when it comes to your retirement income. These three legs are actually a problem. Social Security is unstable, pensions are going to be a thing of the past at some point, and savings in America is just too low. So let's move on, Andrea. I'm going to talk about how you can actually solve some of these problems here.
Okay.
So when it comes to the new three-legged stool that we're going to talk about, the bottom line is this. When it comes to a new three-legged stool, it's really now only two legs. Your Social Security benefits and your 401k that you have. So how do we solve this problem of the new three-legged stool and make sure that we can actually get an additional leg added so we have balance? Well, we have to look at how we can increase our income. And so as we always have spoken about in our other videos, we think that if you can do this, you want to choose a Roth IRA or a Roth 401k for your savings. A Roth will give you a tax break as a senior. Yes, you may pay a little bit more now, but you will pay less later by contributing to a Roth or converting to a Roth early. Also, you want to make sure that you maximize your Social Security benefits. You can literally get anywhere between 124 to 132% more income by being smart on planning for your Social Security benefits. And we can help you with that. And the third thing is something that's overlooked so many times by retirees. We don't have many pensions to rely on, so you might want to think about adding an annuity for the third leg of your retirement income sources, because an annuity acts as an individual pension and as another source for lifetime income that you're going to need. So I hope that this information was beneficial to you in helping you understand how to establish a good retirement income plan. We want you to subscribe to our channel, and if you have any questions or comments, please leave them in the comment section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thank you for watching, and remember, if you have questions,
we have answers.